I was recently looking for information about stocks in the S&P 100 index and found that some stocks in the index are not mentioned at all. They are not discussed anywhere and no one is paying attention to them. I felt sorry for this and decided to dedicate a separate video to each of the stocks. I focus on the main description of the company, what products it makes and how it benefits people. I look at interesting facts about the company's history, the company's development, the historical stock price, dividends paid and other interesting things about the stock. Welcome to my Invest with Jiri channel. In today's introductory video of an entire playlist dedicated to the S&P 100 index, I'll explain what indices are in general, what you can use indices for, what types of indices you can encounter and how to trade indices. Along with the content here on YouTube, I also create content on Patreon where I provide more detailed analysis of companies in videos or articles. I also analyze different calculators or news from the economy. If you feel like it, I'd be happy to have you join my subscribers. And now let's get to today's topic. What are indices and what do you use them for? Investment indices are tools that are used to measure the performance of a market or a particular sector. These indices are made up of a number of stocks and are designed to reflect as closely as possible the performance of a market or sector they represent. There are many different types of investment indices, including broad market indices such as the S&P 500, which includes the 500 largest US companies by market capitalization, or global indices such as the MSCI World, which includes stocks of companies in more than 20 countries. There are also indices that focus on specific sectors, technology or healthcare, for example, and indices that track stocks with certain characteristics such as high dividend or low volatility indices. Investment indices are important to investors because they allow them to track the performance of a market or sector and compare the performance of their investment portfolio with the performance of the market or sector. Investment indices also provide investment managers and analysts with important information about the overall performance of a market or sector and can be used in the construction of investment strategies. Indices can be traded on the stock exchange through exchange-traded funds, ETFs. An ETF is a fund that tracks the performance of a particular index. ETFs make it easy to buy and sell indices. By using futures, which are contracts that allow investors to buy or sell indices at a set price in the future. Futures are traded on exchanges and investors must enter into a contract with another trader who wants the opposite contract. Essentially, it is similar to buying and selling as with ETFs, but you need to find a suitable contract month and buy it. Another option is options contracts. Options allow us to buy or sell indices at a set price in the future. 5, 30 or 300 days, but unlike futures, option is optional. This means that investors have the right, but not the obligation, to transact at the set price in the future. Option contracts have the specifications of expiration, option price, contract size or volatility dependence. Let me take the example of broad indices focusing on entire economies. S&P 500 includes the 500 largest US companies traded on the NYSE or Nasdaq. Nasdaq Composite includes 3,300 companies traded on the Nasdaq exchange. Dow Jones Industrial Average, an index made up of 30 large US companies, mostly in the industrial sector. Nikkei 225, an index containing the 225 largest Japanese companies traded on the Tokyo Stock Exchange. FTSE 100, an index of the largest companies traded on the London Stock Exchange. DAX, an index of the large German companies traded on the Frankfurt Stock Exchange. Hang Seng Index, an index containing the largest companies traded on the Hong Kong Stock Exchange. CAC 40, index containing the largest French companies traded on the Paris Stock Exchange. S&P ASX 200, an index containing the 200 largest and most liquid Australian companies traded on the Sydney Stock Exchange. Shanghai Composite Index, an index containing the largest companies traded on the Shanghai Stock Exchange. In addition to indices, there are many sector ETFs that allow investors exposure to specific sectors and areas of the market. XLK, Technology Select Sector SPDR Fund, XLF, Financial Sector, XLV, Healthcare Sector, XLY, Consumer Discretionary Sector, XLI, Industrial Sector, XLE, Energy Sector, XLP, XLRE or XLC, and so on. There are also alternative ETFs. Investing in assets outside the traditional stock and bond markets. They include several categories of investment products such as commodity ETFs, currency ETFs, alternative ETFs. These ETFs may include hedge funds, private equity funds, or other alternative investment strategies. Inverse ETFs. These ETFs seek to profit from declining prices of the assets they track. For example, an inverse ETF tracking the S&P 500 will profit if the S&P 500 index falls. Interesting are the so-called leveraged ETFs. These ETFs use leverage to amplify exposure to an asset. For example, a leverage ETF tracking the S&P 500 can be amplified by 2 or 3 multiples. Smart beta ETFs. These ETFs seek to achieve higher returns than traditional index funds through the use of advanced stock selection strategies. Thematic ETFs. These ETFs focus on specific trends, themes or industries such as blockchain technology, climate change or robotics. Active ETFs. These ETFs differ from traditional index funds in that they use active portfolio management and seek to achieve high returns. In this series on individual stocks, I will focus on stocks in the S&P 100 index. This is the short name for the Standard & Poor's 100 index, also called the OEX index. It is a capitalization weighted index of the 100 large US companies included in the S&P 500, one of the most respected stock indices in the world. The S&P 100 index includes the most significant companies in various sectors of the US economy, including technology, financial, healthcare and energy companies. This index provides investment managers and analysts with valuable information about stock market performance and is often used as a benchmark for comparing portfolio performance. So today we'll look at an overview of the underlying indices and sector ETFs. We discussed that you can trade indices via ETFs, futures or options. We listed the most well-known indices, the most well-known sector ETFs or alternative ETFs, and finally we listed the stocks that you can find in the S&P 100 index. These stocks are some of the largest and best-known companies in the world, and investors often look to them as fundamental economic indicators. As I said, in the following videos I'll go into more detail about each of the stocks in the S&P 100 index. This will be a great opportunity for anyone who wants to better understand how the markets work and how to invest in stocks. So be sure to watch the other videos to learn about new and more familiar companies. If you enjoyed the video, please give it a like and I look forward to seeing you next time. Have fun and invest wisely.
Thank you.